Alright guys, I'm going to make a video for you guys on how to make money selling options. This is going to be a quick video, small details, but I hope this is helpful for you guys. So we're going to be using technical analysis for selling options and no Greeks involved. I do not believe in Greeks. Greeks are not there to help you. They're there to help you get your mind twisted on things. I believe price action is king, and I will explain why in this video. So first off is we're going to be using supply demand zones. If you don't know what that is, then go watch my previous video or the top right of the video. Please watch that video first. That will help you understand what supply demand zones are. First off is stock prices will always respect levels, especially on high quality stocks or any stock that respects the levels. For example, Tesla, Amazon, Google, Netflix, Nvidia, AMD, bunch of different companies out there that you can do. I would never suggest selling puts or calls on on a company that you don't want to own. Now, one good thing about selling options is that theta decay and time decay is on your side. So do not panic like you are as an option buyer, because number one, as an option seller, is that you don't have to worry about nailing a good entry. All you have to worry about is staying above or below a certain price, whichever side you're on, cash group put or cover call. And on this chart right here, I'm going to explain to you guys real quick, a little breakdown real quick on supply and demand zones. So we have the supply zones. Supply zones are where all the bears are. Every bear position, any bear type of play will be taken on the supply zone. Vice versa for the demand zone. Demand zones are where all the bulls are. All the bull strategies, the bull related plays will be there. The green zones are bullish for option sellers. The red zones are bearish for option sellers. So you want to play as the house. You are not an option buyer again. If you are an option buyer, all this will be flipped around. Now, for an option seller, you want to focus on levels and respected zones. Right here, this zone has been respected as a bear and bull zone. I will explain why in a second. This is a very clear and clean zone for cover calls and cash group puts. So this zone right here is where Tesla has respected for many months right here. But again, this is any time frame. So let's just pretend that this is day trading time frame. This is 1 day. This is weekly. This is monthly. It doesn't matter. This is all the same for every time frame. So let's say that we're day trading, for example, in this case. Tesla is bouncing up and down in a certain level of resistance and support zones or supply and demand zones. So there's a certain level that Tesla keeps rejecting from. And in that case, that will be in the green zone. So every time we get to the top of the green zone, we're coming back up and down. The same thing with the this should be green or red. Or green actually, because that will be the demand zone. This is going to be the red and the green zone, but right now it doesn't matter because this is the bear and bull zone. I'll explain why in a second. Every time we get to the green zone, as long as we bounce off of a certain area, this is where you want to do cash group puts. Every time we get to the top of a zone, let's just pretend that this is red for now and that all of this never happened right here, okay? So this is where you want to do cover calls. Every time we drop down, take profits. We come back up, do cover calls again, come back down, take profits. You don't have to always hold until the expiration to make money. You can always take profits on the next day or two. Whatever works for you, whatever you are satisfied with, okay? Now, cover calls can work until we break out. And sometimes in that case, it's not the best case for option sellers doing cover calls because they're blindly trading based off of Greeks. Now for technical analysis, sometimes you can predict a breakout incoming and avoid a disaster in cover calls. Right here is what you want to read. Most option sellers don't use charts. This is a bad case of a cover call play because of a breakout. So this is a breakout right here again. This is a breakout right here again. So I'm going to drag this over here. I'm going to drag this down here and explain that real quick. So over here, we broke out. Let's say if you're in cover calls and it starts breaking out, it goes in the money. You kind of screw yourself over, but you also make money because you're assigning your calls for profit at the strike price. As long as your short price average is lower than the strike price, you still made money. But you have missed out on a ton of money right here on this breakout. To avoid something like this happening again, you want to go look for technical indicators that may signal a breakout. The squeeze indicator, volume, candlestick patterns, and more can signal something like this. So pay attention to avoid a play go wrong. I would suggest looking into any of the indicators that I suggested in that annotation. You can go ahead and do the TTM squeeze indicator. That actually helps a lot with identifying breakouts and breakdowns. But moving on here, here we go. So we break out, we hit a supply zone. So now this is going to be a demand zone because we are currently above that. So we hit a supply zone because we had some resistance over here on Tesla. So always look for the history of a chart and see where a price has respected a certain level of resistance and support. And in that case, we're going to be doing cover calls right here. We sell off, take profits, and guess what? We're bouncing off of the same level that we used to hit resistance at, which is currently going to be demand zone. This is where you want to do cash creep puts. So this is why I also said this zone has to be respected as a bear and bull zone. This is a very clear and clean zone for cover calls and cash creep puts. Cover calls over here, and now we're doing cash creep puts in this zone. Take profits, get into some cash creep puts, ride up, take profits. We're hitting that same zone again in the red zone, the supply zone. Cover calls again, come back down, we take profits, and guess what? We're back at the same green zone, the demand zone again. We do cash creep puts again. We come up, take profits, and now we're chopping up, and we're not sure what's going on here because we're not hitting that same range. Unless you're day trading and you're going in the smaller time frames, you might see some opportunities in these little candles right here. But as an option, but we're on this time frame right here, we're looking for multi-week plays. Unless you're day trading again, you want to go in the smaller time frames. But right now we're focusing on the red and green zones. Now we're back at the demand zone again. That is where you want to do cash creep puts. Make sure your strike is a few points below the support level because that will give you a higher chance of profitability and a less chance of being assigned the option. The stock goes back up. We take profits. We do cover calls again as we hit that supply zone. Take profits. Repeat until it doesn't work anymore. Now, this is the same thing as earlier when Tesla started breaking out. To avoid something like this happening and screwing yourself over and losing a lot of money on the table, you can go ahead and try a few different technical indicators that can help you identify a incoming breakout, squeeze indicator, the volume, candlestick pattern, and more can help signal something like this. So pay attention to avoid a play go wrong. We're back up. Nothing going on here. We hit a big sell-off right here. We come down. There's not much really going on right here. We're not close to that retest level yet, but you could try to do some cash creep puts. We'll see how that goes. But now we go back up. We're in the same supply zone again, the same resistance over here. We do cover calls, and we come back down, take profits. We're chopping up again. We're back in the same supply zone. And guess what? We're over here. Now we're going to go over here in the demand zone again. We're going to do a few points below the zone level, around 395, for example. We're going to do our cash creep puts around 385 or 390. Depends on your time frame. Let's go over here, for example, on this thing. Zone for bullish positions. Demand zone, support zone. Cash grid puts are favorable here due to the demand zone retest, the green zone. I always choose a few strikes below the demand zone level. For example, support level is 390. My put strike will be 385 or 380 depending on the expiration. The farther out your expiration is, the farther out of the money to increase chances of profitability. The more at the money you are with more time, the higher your chances are of being assigned. So for example, let's say that Tesla will be at 390 again. But if you're giving yourself multiple weeks of expiration and your strike is 385 or 390, you have a much higher chance of being assigned, because all that time you're giving the option buyer all that time to be correct and on his side. But as an option seller, you want to try to make sure that you're being very scarce on the strike and the time. You want to give the option buyer a very bad deal for him, basically. So you want to make sure you have a good amount of time. You give that option buyer a little amount of time to be correct, and you want to make sure as yourself as an option seller that you have a very good hand of theta decay and time decay on your side. So I'm going to give myself a week or two of expiration and at least 10 points out of the money for this play. I don't care about the premium that much because I know that my chances of being right are higher and my chances of being assigned the shares are lower. So I have a good hand right here as an option seller. Now the stock goes up again. This is currently what's going on right now with Tesla. So right here we do have a supply zone coming up again, and Tesla has been up a good percentage in the last few days right here. So it might be breaking out, it might not be breaking out, but if you have shares of Tesla at a very good average price, let's say for example 380, Tesla is up currently 20% in the last couple of weeks ever since touching that demand zone. Now 20% up in a couple of weeks is pretty crazy because this is not healthy right here. So Tesla does have to come back down and hit the supply zone. Go ahead and do some cover calls. Go around to 480 or 500 strike for you guys if you want to do that. Tesla will eventually come back down and probably do a little retest of this area right here in the next couple of weeks. We'll come back down to 420s again, and I believe that Tesla will come back up higher and break out above there. So make sure you have your cash creep puts and cover call plays ready on Tesla. Now, when it comes to technical analysis, you always want to make sure that you're paying attention to supply and demand zones. It helps a lot. That is where the money is. Greeks, they don't tell you much. They just give you numbers and twist your mind. If you respect the level, if you look for respected levels on a chart, you will definitely make money a lot more consistent this way using charts. If you haven't been, if you don't do any charts at all, I highly suggest get on it right now and start learning supply and demand zones. Especially if you're an option seller, you can probably double your profits doing option selling using technical analysis instead of Greeks. That's it for the video for you guys. I hope this is helpful in some way, especially as a chartist. I think the gold for option selling is using charts. If you guys have any questions or anything like that, let me know. I'll be happy to help you guys with another video on how to make money selling options. If you guys want another video on something like the top 5 rules for option selling or something like that, let me know. I'll be happy to make it. I'll see you guys in the next video. Thank you for watching.